Society Report Writing Workshop. I'm excited to see so many people joining us tonight. My name is Ling. I'm part of the University Engagement Committee in CFA Sydney Society. We are a not-for-profit society. My committee focuses on engaging with universities and the students, and here to support you in your career aspirations. This workshop is designed for students who are participating in this year's research challenge and anyone who are interested in improving report writing skills. We all know it is so important. If you don't have the skill to write and put together a professional equity research report, then all the hard work goes into researching the stock becomes meaningless. So we organized this workshop to help you understand how to write a good equity research report and convince judges and your future clients with your recommendations on whether to buy, hold, or sell a particular investment. We are delighted to invite our keynote speaker, Brian Henn from Morningstar. Brian is the Director of Equity Research, Australian and New Zealand. Morningstar is a leading global provider of independent investment research. Brian joined Morningstar Equity Research in 2014, having worked as an equities professional across institutional sell-side research, funds management, and retail advisory for a number of firms since 1997. Prior to Morningstar, he worked as a fund manager at Constellation Capital Management and as an equity analyst at Citigroup and Credit Suisse in London. Brian holds a bachelor's degree in commerce and a bachelor's degree in law, both from University of New South Wales, and also have a postgrad diploma in applied finance. In this workshop, Brian will share with you the key skills in transforming thorough research into reports that are clear, concise, and compelling. He will start with an introduction on what an equity research report is, who makes them, and the objectives. Then deep dive into report structure and what should be included in the report. You will have the opportunity to ask Brian questions. So please type your questions in the chat box and I will ask Brian at the Q&A session. Okay, without further ado, I will pass it on to Brian. Brian, you're on mute.
Can you hear me okay?
Yeah.
Okay, great. Let me just, I think there's some. Okay, I hope you can hear me okay. Thanks, Lynn, for those kind words. And thank you to you all who have Zoomed in for this workshop. First of all, if any of you are currently in a lockdown, and I suspect many of you are, I sincerely hope everything is well with you. I must say, I, for one, am completely over it. I'm stuck at home. My kids are starting to annoy me. I'm starting to annoy my wife. And my wife seems to be spending an awful lot of money on Amazon, judging by the deliveries we get every day. The second thing I want to say is it's really great to see so many smart, talented people interested enough in the financial markets to take on the CFA and to participate in these equity research challenges. I take my hat off to you all for having the initiative and the drive, because I have been told how much work is involved with all this. So well done to you all. So let's get into it. Report writing. Now, let me just hope these slides are coming through. Now, it may not sound like the sexiest thing that an equities analyst does, but it is perhaps the most important thing an equities analyst has to do. You can be the best financial modeler in the world, the smartest valuation expert, or the person with the greatest insights into what makes a stock price move. But if you can't communicate all that clearly and succinctly by your writing and your reports, then really nobody's going to know how good an equities analyst you are. You know, it's taken me 24 years of writing equities research reports and counting to realize all this, but I'm really confident that it won't take as long for you guys now that you're about to learn from all my mistakes and trials and errors. So let me start on these slides and I just skipped the boring disclaimer, and there we are, slide 3. Now, before we get into the nitty gritty of it, let's define what equity research is. I'll tell you straight off the bat what it is not. It is not an academic paper which gets marked and for which you get an award or a degree. It is not something that you use to dump everything you know about a company and show off how much you know. And I tell you, it is definitely not supposed to be a Bible of facts and figures or a history book of what has happened to a company or a stock. And what is an equity research report depends on who the author is and what is prompting the research. So if I just move ahead to the next slide. There are many people who produce research reports. There are those sell-side analysts, such as those who work at, say, Goldman Sachs or Morgan Stanley, who are probably the first people you think of when you think of someone writing research reports. They write reports so they can communicate investment ideas to fund managers and people who have money to invest or are interested in analysis and recommendations. There are buy-side analysts who work in funds management companies such as Fidelity or Magellan, who produce research reports for mostly internal consumption, for internal discussions, to decide what stocks to buy and sell for their portfolios. Then there are investment banking analysts who work at places such as, say, Macquarie Bank or UBS, who produce research reports for M&A ideas or to present some corporate clients who may be interested in doing some corporate deals. And when it comes to, say, the traditional sell-side analyst research reports, there are many catalysts or reasons for writing a research report. And right here on this slide, I've outlined some of those right here. But if we move on to the next slide, now here's where the rubber hits the road. No matter who is writing the research and the reasons for that research, there are some ironclad realities that we must always remember. Those are readers, whether they are fund managers, retail investors, corporates, or even you and I trying to make a buck in the stock market. They read equity research reports because they want to either, one, get information or insights that help them identify what to invest in and why. Two, get unique opinions and analysis that help them make investment decisions. Or three, get stock ideas or recommendations that they can act on. Now, equally important to keep in mind, all these consumers of equity research, they all have very, very short attention spans. And they have access to, or should I say, are absolutely inundated with other equity research, media articles, Twitter feeds, Bloomberg, Reuters, Reddit, even astrology, and many, many other sources of information. And think about it, even in this CFA research challenge you guys are participating in, I think the judges who will be reading your reports, they are all market professionals. who are bombarded with research and information all day, all night. After all that, they will be spending their spare time reading your report for this challenge, along with all the many other research reports that will enter this challenge. So the secret to writing a good equity research report comes down to meeting these needs of the reader while appreciating these constraints facing the reader. Now, there may, of course, be many ways to do this in an equity research report, but my suggestion is for a structure like this. So next slide. 1, I suggest that you treat your front page as the most important page, the most important piece of real estate on your report. Give the reader what he wants right here, straight up, in terms of insight, recommendation, or call to action. You back up each claim with some teaser facts or figures or analysis. You don't need to reveal everything, but enough to show that there's substance behind the claims and to tempt them into wanting to know more. And because equity research is not science, but really an art form, you may even want to discuss what could go wrong if it's a buy recommendation, or what could go right if it's a sell recommendation. This is also valuable because most of the best investors I know, they want to know the downside risks before they even worry about the upside potential. Then from page 2 onwards, you substantiate and elaborate each of the front page claims with some very well laid out, very cogent reasons, supported by charts and tables. Now, I can't emphasize enough how important charts and tables are, because they not only tell 1,000 words and show people that you know how to distill something complex into something succinct and simple to digest, but charts and tables also break up the text and make, you know, any equity research much more interesting and easier to read. And then this is the controversial bit, I think. Then and only then, I suggest you put in all the things like company profile, like segmental descriptions, industry landscape, market positioning, financial models and valuation analysis, and so on. You do all this later to show that you didn't make up all the claims on the front page and the subsequent pages, that you didn't just, you know, pull them out of your backside, but that you've actually done the hard work, the nitty-gritty industry and company analysis, the modeling, the valuation, and that all that hard work provided the foundation and the basis for the insights, you know, the conclusion, the call to action that you presented on the front page. So when you look at the structure that I suggested on this slide, you know, it's a bit like one of those movies where it starts with a bang, the climax, to immediately grip the audience's attention, to make the audience go, whoa, that was straight to the point. Then you present the story leading up to that climax, the substantiation, the elaboration, you know, the reasons why Superman bashed the shit out of Batman in the opening scene. What set them off? Then after all that, you present all the background information, the company descriptions, the industry analysis, the macroeconomic drivers, the backstory as to how you know, Superman became Superman, how Batman became Batman, and how they gradually started hating each other's guts. So next slide. So up to now, most of this may sound a little too, say, theoretical. So I took the liberty of mocking up an example. You know, this example is actually based off a research that I published recently, but you know, I've changed the figures and the names just in case it gets out there and, you know, I get a call from the company asking me what the hell kind of a stunt I'm pulling over here. I won't go through it line by line, but this slide here would be an example of a front page. And if I just read out the first paragraph, the first claims, it begins with a conclusive heading: improving competitive and market dynamics in mobile, a boon for earnings outlook. It then highlights what it means by the heading by making its opinions, conclusions, claims in clear, no uncertain terms. You know, mobile prices are on the mend. 2 companies have raised prices. So the condition is perfect for this company called XYZ to do the same. Why is that important? Because mobile represents more than half of the company's earnings. Not only that, but those mobile earnings will also be boosted by recovery of earnings from all the COVID damage. So at each turn, it includes snippets of figures and analysis to back up the claim, to provide context, to illustrate materiality. And the same formula follows for the next claim, the next heading, and you know, I'll leave you to read the rest if you're interested, but maybe the last paragraph is worth highlighting. That is what we think the stock is worth, $50 per share. How did we get to that? On higher than consensus earnings forecasts based on a multiple method, cross-checked with DCF. And what's the downside if we are proven to be off the mark? Well, the stock is currently trading at 6.9 times, well below global sector average. So it looks like there's valuation support, even if things don't go exactly as we hope. The subsequent pages are then elaboration and justifications for the claims made on the front page in more detail. And don't forget to support them with conclusively titled charts and tables. And when I say conclusively titled, I mean, instead of labeling a chart mobile price movements of 3 operators, you label it like rising mobile prices after 3 years of heavy discounting, so that you're getting across to the reader the point, the purpose of the chart right there in the heading. And you allow even the most attention deprived reader to get the gist of the reasons for your claims by just reading the charts and their headings. And if those charts and tables and the headings pique their interest, then I can assure you they will read the text around them. And again, I emphasize charts and tables break up the text and make the report much more reader friendly. Then finally, on this slide, we have all the appendices covering all the important areas that you will be spending most of your time analyzing during this challenge. As I said before, even though we put all this in the appendices, these are the things that you really have to know and include in the report to show the judges or the readers that you've done the hard work, but also so that you have the fundamental basis for making all the big claims, conclusions, and recommendations that you're making, on the preceding pages. So that's really all I had to say. And this slide here is just a short summary of it all. But if there are two things I would like you all to take away from all this when it comes to research writing, they are these. One, keep the audience in mind and give them what they want, not what you want them to want, if you know what I mean. And two, have fun. And I tell you, the best way to have fun is to make your research stand out, opinionated and forward-looking, rather than beige, safe, and backward-looking. Now, I've intentionally left a lot of time for questions because I think that might be more useful to people than me droning on for another 10 to 20 minutes. So I will stop now, and hopefully I left plenty of time for questions if Lynn or Sarah or Michelle, if you don't mind moderating.
Yeah, thank you, Brian, for the great presentation. I've got a few questions came in. So firstly, thanks for sharing all the good examples, Brian. But could you share with us how to a bad equity research report look like and how to avoid them?
Oh yeah, I honestly believe there's no such thing as bad equity research, because I know how much effort goes into these research, but for an equity research to stand out, to be well received, to be read, I would simply flip around everything I said during my talk and urge any analyst to avoid brain dumping everything you know about a company, to avoid writing your report as if the writer has all the time and patience in the world to read your every word, every preamble, every historical regurgitation, and to avoid making claims without justifications. Now, you would have noticed I didn't say avoid making wrong recommendations. If any of you guys become equity research analysts, you will make some bad recommendations. I can almost guarantee that. But that's just an outcome from a process. And at times, outcomes are completely out of your control. What you can control is the process itself. And in that process of writing an equity research report, I would suggest you avoid all the things that I just said that you should avoid.
Thanks, Brian. The next one is, how do you deal with macro outlook for equity research in the report? Especially some stocks are largely influenced by macro factors like interest rate, inflation, and equity analysts are not economists. So what is the best way to deal with that in the report?
Yeah, that's a very good question, and that's a tricky question to answer because it really depends on what kind of firm that you work in and the support that you have from macro specialists. But let me say this: even though equity analysts are not economists or macro strategists, the buck stops with you when a research report or an investment recommendation go out under your name. So Lynn, let's say you cover the building material sector. Revenue and profitability of companies in this sector are heavily dependent on economic factors, like you said, interest rates, house prices, construction activities, lending volumes, building approvals. The easy way would be to just use these macroeconomic forecasts from your in-house economist or strategist or some other experts in these macro variables and say in your report, all your numbers and recommendations are flow on from incorporating all those forecasts from other people. So if my recommendations go wrong, heck, it's not my fault. But if I'm right, then yeah, it's all my own genius. And mind you, I know analysts who do that in real life. A better way, however, would be for you to incorporate these macro forecasts from the experts, show how they flow through to your forecasts, and then go a step further and do some scenario analysis or sensitivity analysis to show how your numbers or valuation or recommendations may change if those macro forecasts are tweaked up or down. So I think that way you achieve two things. One, you show that you're aware of the important macro drivers of your company's businesses and that you know how to collaborate with people with more expertise in those areas. But two, to show that your model is structured robust enough to show what's the sensitivity and materiality of any changes to these macro drivers, in case you're wrong or in case these macro experts are off the mark. Again, it's really about showing you have a robust process to incorporate these macro drivers, even though you may not have control over the outcome of what those variables might lead to.
Yeah, very good point. Thanks, Brian. The next one is what are some good resources to improve research writing skills? And do you have some good examples of equity research reports to read? One question from the student is, are there any research reports of yours that are publicly available that they can read?
Yeah, I don't know why the question then turned into wanting my research, because I thought the question was about wanting good research. But yes, Morningstar research is available. I don't know how it can be made available freely to the public, but if you are interested, perhaps I can send a couple of my published research to you, Lynn, and you can forward it to the person who asked for it. But in general though, I must say there aren't many like handbooks or textbooks I know that cover equity research writing. There is one book, I think it's called Best Practices for Equity Research Analysis. Very original. I think the author's name is James Valentine. That has a couple of sections on communicating research that some of you may be interested in. But, I've been blabbering on about the importance of keeping the audience in mind and what the audience wants during this talk. So to write better equity research, I think it's very helpful to read how consumers of research think and what they look for. So to that end, I think anytime you can get your hands on fund manager reports or musings would be very useful. I mean, you can't go wrong with those Warren Buffett annual reports or those insight pieces from good fund managers such as Howard Marks at Oaktree or Bill Ackman at Pershing Square, or even our own Hamish Douglas at Magellan. But when you ask, how can you improve research writing skills? At the end of the day, let's face it, nothing will improve your research writing skills more than actually doing it, because you know, just like anything in life, maybe with the exception of gambling, the more you do it, the better you get at it. So, and in terms of other examples of good research, I mean, there are so many good research analysts out there, and I don't know how you would access, but you know, it all depends on the sector and experience of the analysts. So I don't want to name any names, because if I name these names, then other people might say, how come, you know, you didn't mention me? And yeah, we don't want to get into that. But that Brian Hand at Morningstar, I think he's really, really good. I think he's the best.
Interesting point. Brian, a few students asking about the appendix. Can you please go back to appendix section? So the question is, what is the best way to use appendix? So if the topic, you know, it's already in the body of the report, what should be in the appendix section?
Yeah, I think if there was a first principle way of doing it, I would do it backwards. I know I just given suggestions to the structure, but when you're actually working on a company starting from, you know, first principles, I think you should work backwards. So in the appendix, you will be doing all this work. So on this slide 9 that I'm just showing on the screen now, all those things, business description, industry overview, competitive landscape, macroeconomic, industry specific drivers, all those things I think you would have to do anyway. So you do it and you summarize all of it in the appendices. And then what you do is you pick and choose from all the data from that appendices and all of the analysis. You pick and choose and extrapolate and put in the main body of the report to back up the claims that you're about to make. And then you summarize that in a very succinct way on the front page to set out those claims. But I think this is where I think I may be making a very controversial view, because I know people spend a lot of time on these things, on this slide that I'm just showing about all the things, you know, the macroeconomic industry drivers. You spend so much time on it. You want to put that right in the middle of the report, if not at the front, because you want to show people I worked really hard. But as I said before, it's not a brain dump. So you put that all in the appendix, and then you pick and choose from that to put in your main body parts, the claims that you're trying to make. And then you go to the front page and succinctly summarize all of those claims with some teaser facts and figures. So that's how I would treat appendices.
Okay, thanks, Brian. Other than company filings, what are the things you like to first examine when starting some research on a company?
Oh, apart from company profile, filing?
Yeah.
Right. Because yeah, I don't want to sound like I'm dismissing them, but when you are researching a company, it is so important to start with the company filings. I mean, I can't stress that enough. I know that being students, I used to be a student myself, you know, teacher asks you to read Macbeth, and instead of reading Macbeth, you run off and get a cheat note from Dymocks for $10 that summarizes Macbeth and tells you exactly what's going on. Yeah, that saves time, but it really doesn't deepen your understanding. So start with the filings, and then you move. And then I think if you start with some good financial journals or newspapers, because they actually give you a flavor of what the market sort of thematics are, what the market is focusing on, then that may sort of direct your energy into more important bits first. And then after that, really, I can tell you, again, going back to the company filings, if you start with the company filings, you start going down all these rabbit holes, and you might end up at Bloomberg, searching on Bloomberg terminals about a certain multiple or certain competitive peer analysis or figures. Or as you do it, it may lead you to an article at on Wall Street Journal that mentions some inside story about how this company is polluting some river down in Africa. So I think if you start off with the company filings, that will be your guide, and that may lead you to various places, including newspaper reports and financial databases, and even some obscure book or magazine entry from 2 years ago that talks about management history and how they used to rip everybody off and run off to Argentina or something. But yeah, start with the company filings and that will be your guide.
Okay, the next one is, how do I balance between qualitative rationale versus quantitative modeling in the report?
Yeah, I think when you start off with a company, I think you should let quantitative take precedence over qualitative, at least at the beginning of the process. Because when you're starting a company, you obviously don't know enough about the company and its history and its management track record to make qualitative judgments without justification. So I think in the first instance, you should focus on the things that you can touch, that you can see, and numbers never lie. So start with the quantitative and see if there are any story arcs or any narratives or any conclusions that come out of all of that quantitative analysis and data and historical analysis. Then I think the story may start to take shape, whether it's a cheap stock, expensive stock, or there's valuation support, or there's some new big drivers that people have not thought of. But yeah, I think it's better. When in doubt, I think it's better to let quantitative overshadow qualitative to begin with. And as you get to know about the company more and more, perhaps you can reflect your qualitative judgments in your forecasts. But then again, your forecasts have to talk to the past history. If a company has been making, say, return on equity of 12%, and in your forecast, you're suddenly saying ROE of 30%, you better have some good justification for doing that. And yeah, and I think that's really all I have to say about that. That's a good question. And as you gain more experience and more knowledge about a company or sector, you can perhaps make more qualitative judgments without perhaps as much quantitative justifications.
The next one is ESG is a hot topic, and it becomes more and more important when assessing stocks. How to prepare the ESG section in the research report? What should be considered in the ESG section?
Yes. ESG is a hot topic. So much so that my employer, Morningstar, recently spent several $100 million, in fact, buying a firm called Sustainalytics. And is investing a lot of resources beefing up our capabilities in this area, because, we all want to do good and be good. And even if we don't want to be good, paying attention to ESG is just good for business. But that doesn't mean ESG has to be the left, the right, the center of an equity research report. They are just some of the many things you have to consider in making an investment recommendation in a report. And one of the most valuable things you can do on ESG in a research report is to address how material are ESG issues for this company's future earnings and valuation. Now, you can talk about all the possible ESG issues until the cows come home in the appendices, but the value you add to a reader would be, what's the bottom line? How do you think, say, having more women on the board and senior management, reducing carbon emissions, working more closely with the communities where you're mining their land. How does not doing any of this affect your longer term earnings, cash flow, the valuation multiple you put on the stock? I think you as the analyst have a responsibility to put these ESG issues through a materiality test and a quantitative impact test. So yes, deal with the ESG issues, but don't just point out what the issues are, but go one step further and state your views about how material they may be to your forecasts and valuations. And where possible, do a scenario analysis of potential impact on your forecasts and valuation or investment views.
The next one is, given in the research challenge, we are expected to write up investment thesis. Do you have any tips with regards to the actual content of these theses and how we can ensure we are focusing on market mispricing?
Oh, that is a very tough question. All I can do, I guess, is refer you to this slide 7, whereby investment thesis, I mean, it really depends on the company, but I can assure you, if you guys spend the number of hours that I think you will be spending on all of those fundamental issues, such as company analysis, industry analysis, and all the modeling and the valuation, I think investment thesis will gradually come out of all that work. It'll come out whether in terms of valuation or in terms of future earnings growth prospects that the market is missing, or the change in industry market dynamics that the market is missing. And therefore you say, hey, you know what, in 5 years' time, I think this thing can earn EPS of 100 and it's earning 10. And the market still thinks it's going to earn 10 to 20 in 5 years' time. So really, I don't think there is an easy answer to that, but I can assure you that if you do all that background work and all that analysis and industry, trying to understand the industry drivers and industry dynamics, then I can guarantee you investment thesis will gradually emerge from all of that. And before you know it, you can craft a narrative, a story arc to I guess fashion that investment thesis and really draw the readers in.
Thanks, Brian. We have been receiving a lot of questions, but one bonus question, which is not in relation to report writing. Students are interested in getting some insights from you about the tasks performed by a buy-side investment analyst. What skills are necessary to be successful in this field?
On the buy side?
Yeah.
Yeah, that's very simple. On the buy side, you can probably chuck away more than half of what I just said during this talk, because at the end of the day, that buy side, if you can pick a stock and it goes up, then you're a star. And even if you don't have much of a sort of analysis to back it up, if you have a track record of knowing, how companies make money and knowing how stock prices react or what are the drivers of stock prices, then I think you'll do very well on the buy side without knowing how to write research reports or do analysis and all that. Having said that, that is a very rare breed. Not many people can do that without doing the hard yakka, the real work behind it. So all the, I think all the skills that you gain from being an equities research analyst, I think it's applicable on both the buy side and the sell side. So that's the first thing I'll say. And then the second thing I say is, I don't know the person who asked this question, what the motive is, but there are different motives for getting into buy side and sell side. People get into sell side because they like the marketing part of the profession. If you're a senior analyst, perhaps assuming that there's no COVID lockdowns, you probably spend about 50% of your time on the road marketing and talking to clients about your analysis, your investment recommendations, and that client interaction actually becomes a very important part of your remuneration and your standing. And I've seen some really, really well-regarded sell-side analysts who are shit at making recommendations, and yet they are well-regarded because they just know how to develop that relationship with clients. Then on the buy side, you really don't need any interpersonal skills. All you need to show is that you're good at analysis, and that analysis leads to good money-making ideas and results. So it's sort of like a very different kind of motives that drive people into either sell side or the buy side, but the fundamental grounding is still the same. I mean, you still do have to do the hard work in terms of financial analysis, understanding companies, how they make money, where they stand in the industry, and all of that.
I find this question very interesting. So the very last one, there is a common stigma that justifying a hold is more difficult than a buy or sell, but a hold might be the right recommendation. How do you justify a hold with a strong argument?
Yeah. And that stigma, sometimes I do agree with that stigma because it's hard to get noticed if you go out there with a 100-page research report and your conclusion is, you know what you should do? You should just hold. And that just doesn't have that impact. But in reality, I understand that sometimes hold is perhaps the most appropriate recommendation. And in a way, you are basically saying that if most of the time you find that hold is the right recommendation, then you are saying that efficient capital market hypothesis does work in the real world, and there's really no point in Brian Hand doing any shit except maybe stay home and watch Netflix. But let's say hold is the right recommendation. That does not preclude you from still doing a very good equity research report, because what you can do is maybe talk about the assumptions behind your hold recommendation, and then go one step further and say, what if I tweak these assumptions? What if I'm wrong in these assumptions? If I tweak this one up and this one up, voila, suddenly the valuation goes up 20%. And if you believe that my tweaked assumptions are more appropriate, then you're looking at 20% upside. Or you can go the other way and say, if I tweak this and tweak this, my valuation goes down to, goes down 50%. Then you present that and you say, this could be the downside. So even though there is no call to action, you can still provide value in terms of, what could happen either way, so that it adds to your client's investment decision-making or investment process. And I must say this, when you look at a equity research report, and most people focus on this recommendation, this buy, sell, hold, I can tell you perhaps up to 50% of fund managers out there, they're not even interested in your recommendation, because their idea is that, thank you very much. Let us make the decisions. Okay, we don't believe in your buy, sell, hold, but can you tell us something we don't know? Do you know anything about the industry that we don't know? Do you have any good contact industry that we don't have access to? Do you, how well do you know the industry? Are you a real expert? Have you let's say building materials, have you actually worked as a line manager on a building site or things like that? So most of the time, fund managers really find value not in the recommendation, but on the insights and the analysis that the research analyst does. And that goes back to one of the points that I made earlier in the talk. Trust the process, develop a process, trust the process, and you may make a name for yourself for that process, even if that process often led to the wrong outcome for you. Some clients don't even care about that because they go, okay, I think your process is sound. I think your process is robust. Help me with understanding your process. Help me incorporate your process in my investment decision making, and we'll worry about the outcome from it. We will take full accountability for it. You don't have to worry about it. So that's why sometimes you see all these analysts and you read the reports and the recommendations are always a very big contrary indicator, and yet they're very well rated. And one of the reasons that they're very well rated is because clients love their process. That, and also maybe the clients get free lunch from them all the time.
Thanks, Brian. Okay, that's all for the night. Thanks for the great presentation, Brian. Thanks everyone for dialing. I hope you all learned a few tips in this workshop and start implementing it in this research challenge. Please bear in mind, for the first round of this research challenge, judges will be making decisions based on the research report you write for Transurban. So it is critical to prepare a well-written research report if you want to win. Here's a kind reminder that the financial modeling workshop is on this Thursday night. Lu Yan from KKR will be presenting. All right, thanks again, Brian, for sharing your insights, and thanks everyone for joining us. Enjoy your night and stay safe.
Thank you, everyone. Good luck.